Business Law Corporation Part 3. Proxy and Voting Trust. Proxy is the written authority filed with the corporate secretary before the meeting, given by a stockholder authorizing a specified person to cast his vote. Generally, it is effective only for the meeting for which it was intended, and in no case shall it be valid and effective for more than 5 years or at any one time. Voting trust is one created by an agreement between a group of stockholders and a trustee, whereby trustee shall exercise the rights of the shareholder either for a certain or for all purposes, for a definite term or for a period contingent upon a certain event, or until the agreement is terminated. It should not last longer than 5 years, except if a longer period is stipulated as condition in a loan agreement. It must be duly notarized, and it must not be entered into to circumvent the laws against monopolies and illegal combination and restraint of trade, or for purpose of fraud. The purpose of voting trust is to enable the stockholder to dispose of some or all of his shares and still retain control of the corporation. Shares of stocks. The capital stock of corporation shall be divided into shares for which certificates signed by the president or vice president, countersigned by secretary or assistant secretary, and sealed with the seal of corporation shall be issued in accordance with bylaws. Shares of stock refers to the rights of the owner in management, profits, and assets of the corporation. They are evidenced by certificate of stock, which is the written acknowledgement by the corporation of the shareholders' interest in corporate property and franchises. Classes of shares of stocks. The shares of stocks of a corporation may be divided into classes or series of shares, which may have such rights, privileges, or restrictions as may be stated in the articles of incorporation. The classes of shares of stocks are: common stock is the ordinary stock of the corporation, entitling the owner to proportionate dividends without any priority or preference over any other stockholder of class or stockholders, but equally with all other stockholders except preferred stockholders. Preferred stock is a class of stock which is entitled for certain preference over common stock. Par value stock is a class of stock which is stated par value appearing on the face of certificate of stock. No par value stock is a class of stock without any nominal or par value. Voting stock, a class of stock which entitles the holder to vote in the meeting of corporation. Non-voting stock is a class of stock which cannot be voted in the meeting of a corporation, except in some cases provided by law, such as amendment of the articles of incorporation, adopting an amendment of bylaws, sale, lease, engage, mortgage, pledge of other disposition of all, substantially all of the corporate properties, incurring, created, or increasing bonded indebtedness, increase or decrease of capital stock, merger or consolidation, investment of corporate funds in another corporation or business, dissolution of the corporation. Founder stock is the stock issued by the founder or organizer of the corporation. Redeemable stock is a stock which may be redeemed or at a fixed date, or at the option of the corporation or the stockholder, or both at a certain redemption price. Promotion stock is a stock issued to promoters or those in some way interested in the company for incorporating the company or for services rendered in launching or promoting a welfare in the company. Shares in escrow are shares subject to an agreement under which the shares are deposited by the grantor and his agent with a third person, to be delivered by the depository to the grantee upon the happening of certain conditions. Treasury stock is a stock lawfully issued by the corporation and subsequently reacquired by it. Treasury shares or stocks are not part of outstanding capital stock, are not entitled to voting rights, are not entitled to dividends, or may be sold as less than par value. Watered stock is a stock which has been issued as fully paid up when in fact it is not, because it has been issued as bonus or otherwise without any consideration at all, or for less than par, or for property, labor, or services at an overvaluation. The issuance of a watered stock is not void, but the subscriber cannot enforce the agreement for the payment of less than its par or issued price, and he can be compelled to pay the balance due to the corporation. Any director or directors who consented to the issuance of watered stock shall be solidarily liable with the subscriber from the payment of the balance due to the corporation. Consideration for stocks: actual cash paid to corporation, property actually received by the corporation at a fair value equal to the par or issued value of the stock issued, labor performed or services actually rendered to the corporation, previously incurred indebtedness by the corporation, amounts transferred from unrestricted retained earnings to stated capital, and outstanding shares exchanged for stocks in the event of reclassification or conversion. Shares of stocks shall not be issued in exchange for future services and promissory notes. No certificate of stock shall be issued until the subscription, together with interest and expenses, if any is due, has been fully paid. X entered in a subscription contract with the corporation for the acquisition of 1,000 shares of stocks with 10 pesos each. At the time of his subscription, he paid the amount of 5,000. X cannot legally demand for issuance of a certificate of stocks for 500 shares. The certificate of stock of 1,000 shares shall only be issued once he has fully paid the amount of his subscription plus interest and expenses, if any. In the above example, X has not yet paid single share, only 5 per share, and has been paid out of his initial payment of 5,000. Hence, if X will not be able to pay the balance and the share will be declared delinquent and will be sold in delinquency sale, the 1,000 shares shall be offered for sale at the public auction. Unpaid shares. Holders and subscribed shares which are not yet fully paid have all the rights of a stockholder, provided that they are not yet declared delinquent. Payment of the balance of subscription. The subscribers of stock must pay the unpaid balance of his subscription on the date stated in the contract, or in the absence thereof on the date stated in the call. Payment of the subscribed shares or any balance thereof may be enforced by the corporation through a call, delinquency sale, or action in court. Call. A call is the official declaration by the board that the sum subscribed or any specified part thereof is required to be paid. It is a demand for the payment of the whole or part of unpaid subscription made by the board through a resolution. Failure to pay on the date stated in a subscription contract or in the call renders the entire balance due and demandable, and subscriber shall be liable for the payment of interest at the legal rate or as provided in by laws. If no payment is made within 30 days from the date stated in a contract or in a call, all stocks covered by the subscription shall become delinquent and shall be subjected to delinquency sale unless the board orders otherwise. Once declared delinquent, all the rights of the delinquent stockholder are suspended except the right to dividend. If cash dividend is issued, it shall be applied to the balance of his subscription, and in case of stock dividends, the same shall be withheld until the subscription has been fully paid. All the rights except dividend. Delinquency sale. In not less than 30 days nor more than 60 days from the date of stock becomes delinquent, the sale of delinquent stocks may be ordered by the board, which order shall state the amount due on subscription plus interest and expenses, the date, the time, and the place of the sale. The delinquent stockholder shall be given notice of the said sale, and it shall also be published in a newspaper of general circulation in the city or province where the principal office of the corporation is located, once a week for 2 consecutive weeks. The delinquent share shall be sold in higher bidder and at public auction unless a delinquent stockholder pays the full amount due to the corporation on or before the date of the sale. Therefore, a stock sold shall be transferred to the purchaser, and a certificate of stock shall be issued to him. If there are remaining shares, the same shall be credited to the delinquent stockholder, and a certificate of stock carrying such shares shall be issued to him. If there is no qualified bidder at the public auction, the corporation may bid for delinquent shares, and the total amount due shall be credited as fully paid in the books of corporation. Shares so acquired by the corporation in this manner shall be treated as treasury shares. The higher bidder is the one who offers to pay the full amount of the balance on the subscription, together with accrued interest, cost of advertisement, and expenses of sale for the smallest number of shares or fraction of the share. Examples: X subscribed for 1,000 shares and a par value of 10 pesos per share. Initially paid 3,000. There is no provision in the subscription contract when the balance will be paid. The board issued a call demanding for the payment of 50% of the unpaid balance on or before January 2, 2006. AX failed to pay 3,500 on January 2006. What will be the effect of this failure to pay? The full balance of 7,000 shall be due and demandable, and he shall be liable for payment of interest thereon. What will happen if X failed to pay until January 31, 2006? All of the shares shall be declared delinquent as of February 1, 2006 or 30 days after the date stated in the call. When may be the delinquent shares of stock be sold at public auction? Not less than 30 days nor more than 60 days from February 1, 2006 or within the period from March 3, 2006 to April 2, 2006. The shares of X who only paid 3,000 for 1,000 share with a par value of 10 was offered to sale at the public auction. The amount due to the corporation, which includes the amount due on subscription interest and expenses, is 7,675 A, B, C, and D offered to pay as follows: 7,600 for 990 shares, 7,675 for 995 shares, 7,650 for 900 shares, and 7,675 for 980 shares. D is the highest bidder because he offers the full amount of 675 for the least number of shares. Alright. Lost or destroyed certificate. The corporation shall issue new certificate of stock in lieu of the lost or destroyed certificate after compliance with the following procedure: filing by the registered owner of an affidavit in triplicate to the corporation stating the circumstances of its loss or destruction, the number of shares in a certificate, the serial number of the certificate, and the name of corporation which issued the same. Verification by the corporation of the affidavit and all other information and evidence with the books of incorporation. Publication of the notice in newspaper or general circulation in place where corporation and its principal office once a week for 3 consecutive weeks at the expense of the registered owner, and cancellation of the lost or destroyed certificate in the books of the corporation and issuance of new certificate 1 year after the last publication. Before 1 year if the registered owner will file a bond or other security to be effective for 1 year, or after final decision by the court in case an action is filed in court regarding the ownership of said certificate of stock. Once the foregoing procedure has been complied with, no action can be brought against the corporation of its officers for the issuance of new certificate in lieu of the destroyed or lost one, unless there is a fraud, bad faith, or negligence attended thereto. Corporate books and records. The following books and records shall be kept and carefully preserved by every corporation at its principal office: a record of all business transactions, minutes of all regular and special meetings of board and stockholders. Stock and transfer book. Stock and transfer book is one which contains a record of all stocks in the names of stockholders alphabetically arranged, the installments paid and unpaid on all stocks for which subscription has been made, and the date of payment of any installment, a statement of every alienation, sale, or transfer of stock made, the date thereof, and by and whom made, and such other entries as bylaws may provide. This book may be kept by the corporation in its principal office or in the office of its stock transfer agent. The records of all business transactions of the corporation and the minutes of any meeting and the stock and transfer book shall be open to inspect by any director, trustee, stockholder, or member at the reasonable hours on business days. They may also demand in writing for a copy of excerpts from said records and minutes at its expense. Any officer and agent of the corporation who will refuse to allow the exercise of foregoing rights without justifiable cause shall be liable for damages to the injured party and shall be guilty of an offense punishable under Section 144 of the Corporation Code. If the refusal of the officer or agent is pursuant to the resolution of the board, the liability shall be imposed on the directors or trustees who voted for such refusal. The financial report of the operations of the corporations for the preceding year, duly signed and certified by an independent certified public accountant, shall be presented to the stockholders or members at the regular meeting of the stockholder members. If the paid-up capital of the corporation is less than 50,000, the financial statements may be certified under oath by treasurer or other responsible officer of the corporation.